Welcome, everybody, to Market Moves. I'm Jason, the Hello, everybody. Welcome to Market Moves. I'm Jason, the Wizard of Ops, and today we've got like a football pregame show. We've got four people on today. A lot of special guests, but it's a special time. It's earnings season, so we need to call in the troops, right? Jay, how was your weekend?
Yeah, pretty good. Just came back from London actually. Spent the weekend over there, and Thursday I was out there just with the wife. So it was a good time. Love London. It's probably my favorite city besides Washington, D.C., where I live. So yeah. How was your weekend?
A lot less exciting than that. No, just cutting down trees and stuff like that. But we first introduce Matt Amberson. Matt Amberson is the founder of ORATS. What does ORATS stand for again, Matt?
Option Research and Technology Services, Jay.
Option Research and Technology Services. I got to tell you, I do not know of a platform that gives option statistics like ORATS does. And today we're going to be utilizing its earnings page, which is very comprehensive. It includes fundamental analysis and option analysis. So it gives you implied moves, the history of the behavior of the stock to its implied move. So it's a fantastic resource, especially for earnings, but also for back testing your option strategies and everything like that. We'll probably do a show just strictly on ORATS at some point. So Matt, welcome to the show. It's a pleasure to have you on.
Yeah, it's great to be here. We've known each other for a long time, and I have a deep respect for what you guys are doing as well.
Yeah. And then we have Andrew. Andrew is our resident earnings specialist. He's very popular on our Discord for doing earnings moves. And the reason why we brought him on is because, like no one else, he can marry ORATS and Volland. And he's very, very good with predicting earnings moves, post earnings with implied volatility drops. So, Andrew, welcome to the team.
Yeah, glad to be here.
All right. So let's get into it. First, we're going to do our regularly scheduled program, which is Jay telling us his plan for the week. And then we're going to dive into the earnings starting for this week. So go ahead, Jay. Take it away.
Yeah, beautiful. Thank you, Jason. First of all, I'm super excited. I can't wait to see the ORATS and Volland combination here today and the analysis that these two are going to give. So, like, really kudos for bringing those two on. So, without further ado, let's get through the plan because there's a lot of content to get through here. So the week is looking actually pretty good. Was I kind of came in doing my analysis, I said there's not a lot of news per se that would move the markets like it has the past few weeks. Like, yeah, we have a couple of flash manufacturing and services PMI on Thursday, but the granddaddy of them all is going to be this chart right here and a lot of the earnings, right? This is what the market makers are going to be looking at to see if companies are growing and guiding out of Q3 earnings, or are they going to be moving down? So just to call out, the expected move in the SPX is a mere 70 points, which is a little bit of a shocker here, considering all of the earnings movement that we potentially have. So the high end of that is about 59.33 on the SPX, and the lower end of that is 57.95. Vanna overview. Nothing's changing there. We're still very much in an aggregate negative Vanna aggregate trend. If the market wants to find the reason to sell, it will find and it will sell hard based on this. But if we look at our cumulative exposure, we do have support all the way down to 57.55 and 57.50, call it. So I want to, if we do get a sell here, Wiz, like we have overnight, I'm not worried or, hey, my God, the bears are coming out and, the world is ending kind of vibes. We're still supportive, but 57.50 is kind of like that area down there that I'm looking at. And if we look on the weekly, this is why I was not favoring, anything to the long side unless we broke out of 58.75 XPX. Is we just have a lot of selling pressure on the cumulative van exposure here, right? And while we're supportive, if we then look at the specific strikes within those areas, right? I mean, look at the weekly, 58.50 was a magnet. That's what I had called out there potentially if we started to sell. We had resistance above spot, and that's exactly what you saw overnight. We got to 58.75. It was a failed breakout of it. We actually didn't even hit it. I'll explain kind of how I got into that trade overnight. We went and hit 58.50, and actually, as of writing, we're right below 58.50. But you can see this magnet, while it was supportive, if we flip it, it's now going to become resistance now, right? So it's going to be a rather large level and a very key pivot on the week. Now, we are still supportive here in, Jason, the 58.10, 5800 region. So you can't get bearish unless you break that 5800, or we have an increase in VIX and IV and a news catalyst. So I'll quickly pause there just to kind of get your analysis. I mean, to the upside, 5900 was like the absolute high I kind of saw in the week.
Yeah, I think one thing I saw like this week has kind of a supportive structure, and it almost seems like the current price is where we're going to bounce quite a bit. I kind of saw it as being erratic, and I think we'll talk a little bit about election with Matt in a little bit. But as long as that implied volatility kind of remains elevated after the election, there's not going to be much vanity or charm kind of degradation, and it's going to allow the market to be quite erratic. I've noticed that over the past week, only one day did the market close within the opening straddle price of the day, of the 0 DTE day. So I think it could continue to be erratic all the way up until the election.
Yeah.
Yeah, I mean,
yeah.
Go ahead.
Go ahead. No, go ahead.
No, I was going to introduce Matt, who has a lot of information, but let's get your trade plan first, and then we'll talk to Matt about election information.
Yeah, definitely. Let me kind of wrap up here. So let me just get into the chart. So kind of on the week from a volume profile, if we look at that and, add our normal Vanda levels on top of it, which I'll do here, 59.14 was a critical level, and we came in overnight, hit that level. If I even go to a smaller time frame, you'll see just immediate rejection of that value area high. And if I lay the Vanda levels on top, you'll see why, right? So you could have attempted a short there overnight. I actually waited for it to break back below that value area, and I wrote this down to 58.50 before I called it quits there. So we are, as I said, right. I mean, I could have tried to gain another 10 points. It wasn't worth the risk for me. Sleep was more important too. But you can see here we hit, we're trading right at that 58.50 SPX level, that magnet. So to Liz's point, don't be shocked that, we use it as a magnet until that data changes. So until then, this is the level to watch out, but it's a tight range. And, now let's get into our other bits of the content. I think this is a good segue, Jason, which is what will move the market then today and the rest of the week.
Yeah. Well, first let's talk about the election while we're on like the macro view. Matt, you said you had some election implied moves and some things to show on ORATS. I guess I have my shared screen, so you're gonna have to guide me.
Just pull up the trade builder, and then we'll talk about it for SPX or.
Yeah,
we'll see how it's coming in. It's still pre the market open right now.
Yeah.
So down in the right hand corner, the ATM IVs are all of the implied volatilities for the months coming up. So you get a good look at how it's kind of going up. That's a contango look right there, meaning the front months are below the back months. But you could see those jumps, and you could see how high it is there. Recently, SPX has added the November 6th expiration. So in SPY, I think we still just have the November 8th expiration. So at ORATS, we have a way to, my background is a market maker, and I backed a lot of traders. We were successful on the floor, and we came up with ways to imply just the earnings move. And it's a little geeky, but I know that you guys are pretty geeky.
Yeah, we are geeks.
Yeah,
give us the geek.
So I'll just briefly talk about how we do it, and then we'll talk about what that is, if that's okay with you guys.
Yeah, that'd be great.
So there's a straddle in the options, and we take the straddle directly after the event. So for the November 5th election, here we take the November 6th. For SPX, for SPY, we take the November 8th. For earnings, for example, Tesla is Wednesday, so we would take the Friday expiration. So we look at that Friday straddle. Now, if you take that straddle price, let's say for Tesla it's 6%, and for the market, we have
6% range.
Yeah, 6% range. So it's if you own that straddle, you make money if it moves more than 6%. It's basically what that's saying.
Okay.
However, it's not fair just to say, oh, it's going to move 6% on earnings, right? Because you have earnings on Wednesday, but you still have that straddle until Friday. So a lot can happen. So the magic, the research, the things that we do at ORATS is we say, okay, what's going to be left of that straddle after the move, right? So if it moves a lot, there's really not a lot left, right? You're basically just, if it goes way down, you just got a cheap call and in the money put. So what we go, well, how are we going to figure out what that straddle is worth, and thus isolate that, period that we will say is the earnings move that happened, right? So we do these things. Well, it's not just a normal distribution day. So we have the hard thing that we do is say we came up with a distribution that is indicative of an earnings move, or potentially an election happening, and we make that earnings move shape is different than a daily shape, for example. Yeah. So that then will give us our expected return. So then we value that straddle over that expected return, over that probability structure, and then also estimate where vol is going to fall to. So if we're still looking at SPX here, where is vol going to fall to? Maybe these dots to the right where they start to get spread out. Those will all come down a little bit after the election. But and so we have that kind of method for calculating a rational relationship between all of those months after. So that's how we do it. So basically what we're trying to find out is what's going to happen, what's the distribution going to look like, what's the value of that straddle over the entire distribution given the fall in volatility.
Yeah, I mean, the one question I have about earnings versus election, you see here with Tesla, which is an earnings move, the Friday implied volatility is high, and that implied volatility does filter out into the out months. So the out months look like lower volatility. It's kind of a backwardation look. But when we were looking at the earnings, and this was something that I wasn't expecting in my analysis, election, it peaks here in this area, but then it flatlines. It doesn't go back into like some backwardation thing where the out months return to an implied volatility that we're seeing prior to the election. Why do you think the market makers kind of price the election this way as opposed to earnings, which kind of has that backwardation effect?
Well, it's two things. One, after the earnings or after the election, it will be in probably backwardation. So then those back months still have to hold a lot of their juice, whereas the front month will get killed, right? So there's still going to be that, and then also there's a lot that's going to happen. we're a third world country now, banana republic, so we can't even count how many people voted for someone. So it's going to take a long time, and they're going to be lawsuits. So it's going to be busy all the way through. So those are the two things, basically.
So what you think is the election the election implied volatility is pricing in the uncertainty of even knowing the election results.
Well, look at the 6th versus the 7th. I know it's a little bit say there's the 5th, there's the 6th, and the 7th is the highest, right? So they don't even think we're going to know for a couple days. So that what's really cool about options is you could see what the actual people with money and that are putting, they're not just talking heads like me. They're actually putting their money on it, right? So, and you could, and they're affecting, as you guys rightly point out in all your work, where they're putting their mony. So, so this is the cool thing about it.
Yeah.
By the way, I even said what it is. So SPY is saying it's going to be, the move is going to be somewhere 1.8%. So SPY, you could see that gap. So that we could only go off that gap. So that's a 1.8 move. The day of election is a 1.6 move. So it's and that's not even that much, if in this scheme of things. But that's what's being implied right now. So it'll be fun to watch.
Yeah. I do have another question. We noticed that a lot of the election positioning is in the 15 November in that serial expiration. When do market makers do this straddle pricing? Because obviously, I mean, the daily options are only offered 1 month out, and it seems like a lot of the positioning was put on longer than a month out. So a lot of the institutions and whatever started positioning for the election on the 15 November expiration. Have market makers been pricing this, pricing in that way all the way out until then? And maybe were these where these moves started getting a little bit higher than the straddle price in the beginning of the day, is that possibly because market makers are getting new expirations to price in the election results?
Well, yeah, I mean, as you say, the November 15th have been alive for a long time. And so people that are betting on it have been able to bet on it for a much longer time. And so, yeah, what you're seeing is, and you can see that, the open interest is all those dots there. And now we're starting to get more, and it's a little bit hard to see because we're zoomed out, and you guys do a really good job of that. So those are all the open interest things. And you could see that where the popularity is, and if people have an opinion there aren't any weeklies, they're gonna go to the monthly, right? And so that's what happened. And then what you're seeing now is SPX coming in, and that makes it really interesting because now instead of just having a Friday, which is great, you have each day, like where people can predict what's going on. So that's really cool. At some point we should talk about zero DTEs and my philosophy behind that. But I think zero DTE has really been a really good thing for market maker positioning, and allows them to get rid of a lot of their kind of normal positioning where they were always short puts and always long calls. And so they would, that would really make the slope calculation. But we could talk about that later, but I just wanted to mention that.
Yeah, that's probably a whole show talking about zero DTE positioning. We noticed the same kind of thing, zero DTE and one DTE really.
Yeah, I mean, the zero DTE doesn't mean zero TTE.
Right.
For a market maker, my zero DTE positions go from, I could trade every day out to 7 days. So they found that the trading is pretty much both ways, two-sided. So if you're a market maker, you could depend on the zero DTEs to take you out of some of your risk, and the put call slope has really come down. So the puts versus the calls have come down. Now recently they've gone up, and because what happens, I think, in a really treacherous market, the zero DTEs kind of leave, and they don't give, So anyway, we digress a bit, but I think that's important to mention.
Yeah, we'll have to do a whole nother show on zero DTE. But yes, we notice a lot of the same things on our platform too. So, all right. So I'm going to bring Andrew into the fold. Andrew, you basically marry Tesla marry ORATS and Volland. Don't marry Tesla. It's self-driving, it's like autopilot in your marriage. But one of the pages we use a lot here on in our Discord is we do a lot of earnings, and ORATS earnings reports. Like I said, they have a lot of this is like all option implied moves and the move against expected, and then all this fundamental analysis here with EPS actuals, how many revisions there are, all the accounting stuff and their balance sheets. And so this is a very comprehensive page too. So we'll start with Tesla, and then we'll start taking your requests. So start putting them in the comments while we talk about Tesla. Andrew, you got to drive me. Let me know what you want to say.
Sure. So the way I do earnings is that I look at ORAS for the fundamentals, and then I look at Volland to find the actual positionings and decide from there what the bias of the trade should be. So for Tesla in particular, I noticed that the IV is around 56%. So it's a little bit on the high side. So you can do like vol crush like options trades. I also noticed that the historical moves, it seems to be more bearish, and it also blows past its expected moves. So it's a wild stock to trade for earnings.
Why is anybody expecting anything less? Just take your expected move and add another like 10%, it seems.
Yeah.
Look at that. Wow.
If you're at the edge of extreme, just add another 10%, and then you may be finally there, is what you're saying.
Well, I mean,
wow.
Could I chime in a little bit here?
Yeah.
Since I designed this report.
Okay.
So, I mean, look at that purple, that purple vertical line up in the top right-hand corner.
This one right here?
Yeah. Okay. I mean, just visually, what do you see? It's so much smaller, and that's the implied move.
Yep.
Yeah.
It's so much small. Like, what are they thinking, right? Like, look at how small it is compared to all the other moves. And we did a big story on Netflix, and we're doing Tesla too. But so what this is saying is, and then if you go down into the table, just right there, the 6.2 in the table. So that's the implied move. Actually, I think it's come down from there, or it will come down from there. And then look at the actual move to the right of that. The average is 9.2. Like to the right, we do the average of the thing, right? So now they're after a big move, they're expecting Tesla not to do too much, which I think is not the best. That's the way the paper is going, probably, meaning that's what the way trading's going. But this is really, I think, an undervalued straddle. And look at all those other moves. Yeah, bearish, bullish. It's all over the place. And what we're seeing in the market, just generally, like, because we do it for all stocks, and we have these things, Jay, that does a weighted average of each ETF/index. So for all of the NASDAQ, we do a weighted average of the implied earnings move, which in this case is 6.2 for Tesla, and the absolute average is 9%, so like 33% undervalued or something. It's about 10% undervalued, which is large. And I'm on the Option Insider a lot with Mark, as you know him, and we do this kind of overall earnings season report. And we talk about, when the straddle owners make money, and it's usually when the vol is low, when there's not too much going on in the market. Now, vol is actually relatively low. When I say that, it's for a lot of these options, like they just haven't pumped up this move. And so, yeah, I think it's a good opportunity for those that want to play it from the long side. This earnings season is basically what I'm saying.
Yeah. Well, all right. So Andrew, tell us what you see here. Let me switch to Tesla. So this is the all exposure Vanna chart, and this is the gamma charts for calls and puts, just so that people have a have a better understanding of what they're seeing. It appears that a lot of that implied move that is so small is because customers seem to be selling a lot more calls than they are buying puts. Is that what you're seeing, Andrew?
Yes, I see the same thing. I noticed that there's a lot of selling on the, I think that's the 240 and 250 area. You see the strikes over there?
Yeah, there's 300 here. There's 250 here. There's 232, but yeah, 250 is a biggie.
And you notice there's not much like put support. So if it's a
Right.
downside move, it's just gonna shoot down.
Yeah.
And then upside, it's like that's the limits you can do. So Volland actually can give you like the range of where the move is based on the positioning.
Mm-hmm.
And then so I use the Vanna to figure out like the volatility scenario. Usually mostly after earnings, volatility drops. So it's usually mostly bullish, unless it's something extreme, and then it can go either way.
Mm-hmm.
So then when I look at the total Vanna, gives you that picture. And then I look at the gamma, which gives you the exact positioning of the customers or dealers. So like, for example, like for the put side, it's like, I think that's 210 or something like that on the gamma puts.
This one right here.
Yeah. So
Yeah,
like,
this
so
is
I feel like,
210.
so like, if you put a short position from there on, it can go down. So and I usually, when I do my analysis, I give it bearish and bullish and sometimes neutral bias.
Yeah.
So for me right now, I feel like if it's past 210, you can have puts if you believe it's bearish, and if it's bullish on the top part, you can start from where it is or from 235, and it should go at most to 240 or 250. Maybe a little bit more because of our ORATS analysis that it blows past expected moves, but
Yeah. Well, ORATS is predicting a 6% move between 220 and 232. That's 12. That's almost a I guess that's like a 6% move. But you could see there's so much more positioning north of 230, north of 232. If you look at the y-axis here, by the way, I know these bars look similar to the size of these bars, but we have a dynamic y-axis. So this is actually 16 million in gamma here on 232 positive gamma, and this is only 6.5. So you always have to look at the y-axis when you're seeing dynamic. But yeah, I mean, even this 250 strike, which kind of looks like a nice bullish target, I mean, that's 30 points. That's what?
yeah.
14, 15%. I think I would take Matt's suggestion and buy straddles. Maybe like
Well, I mean, the other call out here, I know you guys briefly, Andrew, touched on, is the put support. I mean, I can't zoom in there, but I see that it was at the 175 strike there, I think, Jason. Yeah, like that is the magnet and the put support, right? So if there's any bad news, like this thing is not going to hold its weight, right? And maybe that's your generational buying opportunity if you're a Tesla bull, but if you're playing earnings, like this is extremely volatile, right? And you don't want to be playing just the naked long or naked short or whatever. You're going to get eaten apart.
Right. Yeah. I mean, if you're doing naked long or short, be long that option. Like
yes.
This is a long gamma environment. So both ORATS and Volland agree that Tesla is going to be an erratic stock, and and also Elon Musk probably put the election on the Tesla radar too, because now he's somehow linked himself to the election outcome. So Tesla is definitely a long gamma kind of stock to check out. So, all right. So let's see. Do we have any? If we don't have any requests yet, yeah. So if we don't have any earnings requests yet, Andrew, do you have anything else that's compelling that we should check out?
Yeah, I think we should look at Boeing.
Okay. So We'll go to ORATS first, right?
Yep. I usually go to ORACS to get a fundamental
Yeah,
feel of it.
me too. That's like where I get my first look. All right, take it away.
Yeah, so the IV is around 44, so
Mhm.
it's not as high as I think, but the historical moves is very choppy, so it's very hard to predict exactly which way it's going for this. A little bias I have is that I over the weekend there's a strike, and it seems like it might be resolved, so it might be bullish news. Historically, Boeing has been having bad PR, you can say, like airplane doors being missing and stuff like that. So it's like I think that people have a negative opinion on Boeing. So, but I suspect, like you see, look at the revisions, it's like 16, if I can see correctly.
Wow.
Negative revision. So it's usually that means that the analysis are too far to one side, and it might not be true. So I feel like since people are expecting it to be negative, there might be a case for risk reward to be positive, since it's bearish that way. But then we can look at Volland to see the actual positioning to find out.
Yeah, really quick before we look at Volland, Matt, how did you determine like when these revise? Like, where do you pull these the EPS expectations from?
Yeah, I mean these are just people revising. You know, we just count the number of advisor or research analysts changing their revision. Yeah, and that is so one-sided. It's shocking. But if you look at the last one, it was 5-2, which is still huge, you know, for anyone, and it went up. So, you know, I tend to agree. Like, you know, how bad can it get? You know, and these analysts are just like lemmings. Like they, you know, I mean, they'll change their after a huge move down. Like you know, they're all about job security. They don't really care about making a good call, in my opinion. So yeah.
I do use this to kind of determine what the market sentiment is. I like these like arrows, and it's very easy to visualize. But in January 24, it looks like Boeing was revised up 12 times and down 1, and earnings beat. So it worked with it. And even the price went up just slightly over the expected move. So, I mean, I don't think it's a determinant, but I do see public sentiment here as a big deal. But I also find it strange that if everybody is so bearish on Boeing, why is the expected move lower than it has been, you know, throughout its history? I think that might be an opportunity. Like here, it's all 5%, 5.5, and now everybody's bearish, but it's only expecting 4.1%. That seems kind of odd to me. That seems to me that people are not buying puts.
Well, here's what I would say to that. Because it's actually, you know, if you look at the actual move, it's a lot less than the implied move. Whereas they're not implying very much here. The average absolute is only 3%. So I'm not, you know, that's not that crazy to me. And it seems to me like Boeing is a lot easier to estimate earnings better. I mean, obviously there's a lot of exogenous things going on. So I don't know. I would be, if twist my arm to pick something, you know, I wouldn't be a buyer. I'd be probably a small seller. I like to do these double diagonals where you know, you have a little risk of the difference in strikes, but it reduces your cost of the trade that you've done. So it's almost like and you know, so you like, you know, I'm not that excited about this one.
Yeah. Well, also something like double diagonals, is your short strike before earnings or after?
No, they're both on, you know, they're both after, but you know, obviously closer is the short strike and closer to the money is the short strike. So you're kind of pinching that strangle, and then your long strangle is a little bit wider. And so what happens is, even if it goes you kind of want it to go towards one of the strikes. You want it to land at one of the strikes because it's kind of the tent. You get the tent going. So, and it's lower risk, but you know, the reward's lower as well. So,
yeah. All right. So here, let's check it out on Volland. All right, what do we have here?
Looks pretty clogged up to me.
Yeah, I was waiting for Andrew.
Oh, you're waiting for me. So I noticed that the largest Vanna strike is, I think it was like 150 or something. So
Yeah.
it's a little bit on the bearish side, but if you notice that all the other strikes are not as high, so, and I feel like
Yeah.
there's negative Vanna stuck between that one. So like I also agree on Matt to do the double calendar before. I was thinking of doing a fly in between, like the pin, the middle part is actually around 150 or 155, and then expand the widths to cover the negative Vannas over there. Because I noticed that in ORATS, the IV is it's on the low end for the earnings side to me. And also, if you notice in ORATS that the actual move is actually in range. It's not
Yeah.
blowing past the expected move compared like Tesla. So there is a case to make it like nothing's happening and it's going to stay in between and sell premium.
Yeah, I agree. I think like this 150 strike here, unless Boeing announces something completely off the wall, I think this 150 strike is a floor. So, if you're doing like a double diagonal, like Matt suggested, putting the short strike just south of here, like at the 145 area, and maybe putting your second, kind of your bullish diagonal, a lot further up might be the play here. I don't know. What do you guys think?
I tend to put my diagonals like right at the implied moves. Market makers are pretty good on the implied moves, so, and that's where you want it to go anyway.
Yeah.
Maybe a little bit tighter than that, just because even if it gets there, you're still long the other one, and they really crush the vol. So
yeah. So I think because since Vanna is predicting the move from the crushing vol, I mean this like one kind of 65 might be, we'd have to pass this in order to actually break out to the upside. So yeah, I mean like 165, what was it, a 4% move? So after this is about, like 7 points. This is 4. So yeah, you might, you could maybe even squeeze a little bit on the downside, maybe squeeze but on the upside here, like 165, I mean that's a good selling vol play. So maybe slightly bullish, but probably not going to move that much. And historically, it seems when we go back to ORATS, it seems that for the most part, we stay within the range. I guess over past the 1, 2, 3, 4, 5, 6, 7, 8 quarters, I guess there would be only 3 times. 9 quarters, 3 times. So that's 33%. That's almost exactly a 1 standard deviation, right? Usually I see these implied earnings moves to be like a 1 standard deviation, 1 out of 3 times, give or take. I know it's not exact, but 1 out of 3 times you'll exceed that move. This seems to mean that, like Matt said, the market makers have priced this pretty well in the past. So, all right, let me. What do we got? We got a little bit of time here. We're at 38 minutes. We're not even close to our record. Come on.
So let me answer Julian here. It's a great question because what happens is you have this double diagonal, and then what I do is I kind of milk that until it expires, and then I get out of everything at the expiration of the front one. Because what happened, you'll see like there's still some life in the front ones, and I don't want to like keep rolling it. I had you want to isolate your alpha, right? So you want to, you don't want to keep rolling and rolling and rolling. I just get out of it at the expiration of the early ones.
Cool. Yeah, I mean, typically I do that too. I think if your data is showing you what's going to happen after earnings. So if you're after earnings, your edge is already expended. So
yeah,
I agree.
And all of our back testing does that. So when I look at our back tests and when to do these things, it's like I just stick to the program. Don't get too cute, and go on to the next one. Try to get your alpha. Try to back test it, and then keep the trading going like that.
Awesome. All right. Do we have any requests? We could fit in one more, right? Andrew, what do you want to look at?
One more. So UPS or American Airlines?
UPS.
Let's do UPS. That's an important one for the economy, right? So let's
That's
take a
true.
look at what he or she's doing. It is doing.
She is a female CEO. Okay, let's check it out. Andrew, what are you looking at?
Well, I noticed that the implied volatility is low. And I also
Mhm.
noticed that the revisions are, if you scroll down to the revisions, is a little bit on the upside.
Mm-hmm.
But the previous earnings history looks like very negative, if I remember. You scroll up. Yeah. So it's also negative and also breaks the expected move. So
Huh.
historically is bearish for earnings for UPS.
Yeah, it looks like recently it's been a lot worse than it has been prior. I mean, UPS has had, ever since they had the strike issue with the Teamsters, they've been hemorrhaging their earnings a little bit. It goes from the $2 and $3 per share down to the $1, maybe $2 per share, and it seems that nobody's happy about it. I think they've been talking about automation for a while. This is something I like to follow because it has larger implications for the economy. But yeah, and there's also a lot in the trucking industry. There's a lot of metrics, outside metrics, that people use to determine trucking activity and stuff like that. So I always kind of see something like UPS and UPS earnings to be strictly business related as opposed to something more overall economy. I think a lot of the overall economy stuff is kind of known already a little bit, and I think that the investors in UPS have an idea of what that overall economy looks like, even if it does just kind of come into the fore for the retail investor. But yeah, we're seeing a little bit of increased expectations, but those expectations are still lower than what they were last quarter. Yeah, it's still kind of stuck in the mud here a little bit, I guess, since the COVID time. So what do we see in, let's see what we look at in
Yeah. So the question is a dealer's position to be bearish all the time, or is it just there's a chance to be bullish, or what's going to happen, or there's no one even cares, or no one's even putting options on it. So, but one of the question is we're not sure if UPS, do people mostly trade it using like stocks, or is it mostly option positioning? So that might be one key factor too. So
Well, I think the biggest holders of UPS stock are the employees and the Teamsters themselves, right? They get a discount on UPS stock and they have a holding period. So I think a lot of that is I think so there's a lot of there's a lot of what's outstanding shares, but most of them are held by people who are holding for the long haul or buy and hold. So this right here, this 140 strike is very compelling on the Vanna side.
yep. It's just that for some, in my experience looking at these volume charts, is usually when there's one big level or one big strike, it gives me a opinion that maybe the position, not many people are playing options on that stock or something like that. So it's very hard to gauge. But yes, I did notice this big spike over here.
Yeah, the notional here is looks like the notional here is at like 12 million or something like that. So it's not that big compared to the actual market cap of UPS. So yeah, earnings might not move it. 140 might be a magnet, if anything, but it almost
kind of a
seems
strange
like
thing that I see on this one is, so the stock's been down. If you go to Trade Builder, on let's click it. So the stock's been down, but if you look it over to the right in the open interest, look at all the purple. The purple is open interest and puts. So so it seems like these Teamsters buy the stock cheap and then buy puts to protect it, and then so they've still got those puts open, right? You rarely see this. You rarely see the puts open this long because it's like, why? But so they must have a time until they could sell it. So this is way out in January. This is the leaps. So there's a lot of people that are underwater in their stock on this particular one. Take that as it may, but that just jumped out at me as odd.
Yeah. This is this 155 strike. We saw that in the gamma. But yeah, you're right. I think what happens is they buy UPS at a discounted price, and then they which is, I guess, UPS's version of stock buybacks, because they're supplementing, and then they just buy the put for the length of their holding time, which I think is, I don't know, I don't remember how long it is. It might have even changed with the recent contract, but yeah, I mean, that makes total sense. They should probably roll these puts out to protect what they got. So anytime you see, like, yeah, that is pretty odd.
Well, they're not doing anything with it, right? They're just going to leave it there. So you have people that aren't going to sell.
Yeah.
So that, take that for whatever you think.
Yeah, I mean, that means it could, at any time we could find a bottom here. It's just that the business side of UPS kind of has to bounce a little bit. But
Matt,
the green triangles, I was going to say, those are insiders buying. That was a pretty good buy. Right.
Yeah.
So Matt, let me just recap. Are you saying that they were looking at maybe putting a cap to the price at 155? Like, that was your thesis, that they didn't want it, or as a magnet? Like, can you just recap that one more time for me?
No. All I'm saying is that these are just Joes on the street buying the stock, buying puts. Not Joes, but and so they're not going to do anything. Like, these are not like. So I guess what I'm saying is, you guys do such great research, but in some cases you're going to have to say, this research really doesn't apply to this January stuff, because look at those puts. Those are just people asleep, and they bought stock, bought some puts, and they don't even look at it.
Yeah, agreed. Right. Okay, beautiful. Yeah.
Mm-hmm. Yeah,
no,
I think
this is a good one as well, Jason. That, like, just from Andrew kind of hinted, like, from an option standpoint, like, these are good ones. Maybe I try to avoid some of these earnings when there's not that much options activity. It's more share driven. So maybe the opportunity is to play the long and short of the shares as the earnings is occurring, and then to use the Volland data, the ORATS data here, to potentially make that move after market, right? Of course, you can buy those shares long and short, if their earnings are within that time frame. But that's another suggestion, is don't always play the options game here, is you can just short the stock or long the stock as well.
Yeah.
Andrew, what's that short term, that cyan, those calls right there in the front month? Could you?
Oh, the cyan means that those charts are grouped, so that we can.
No. My stuff is cyan. That just means there's a big open interest right at the money. Okay. Like that one right at the money to the left, Jay, right there.
Yeah, it's 135. It looks like.
Yeah. So how are they positioned? Can you tell?
So that 135 seems to be, there's a lot of calls here. What is cyan? So that's puts, right? It looks like most customers are long puts, but it's kind of it's double-sided though a little bit. So
okay.
Yeah. There's some long and some short there. So it's
yeah,
also very small. When we're looking over here, it's only 500K. So it looks like it's almost like a customers. There's long and short puts kind of offsetting quite a bit there.
Yeah, you notice that the Volland actually picks up that 150 puts that the ORAS showed on the open interest side on the bottom. So we kind of pick those up. Yeah, like that's what I said. Like, sometimes you look at the ORATS and the Volland, sometimes there is no play. Like Jay said.
Yeah, this one's probably a no play.
I mean, again, twist my arm. I don't think it's going to move that much, but who knows?
Mm-hmm. Yeah, I don't know. They've had a lot of a business overhaul there, so we'll see. All right. So, Matt, Andrew, it's a great pleasure to have you guys on.
Yep.
We'll have you on for more earnings and stuff later on, I guess, when needed. It's a pleasure. You guys did a great job, and if you guys want to check out ORATS, it's www.orats.com. If you want me to get credit for you checking out ORATS /Wizard of Ops.
Yeah, You guys have an affiliate, and we connect to now Interactive Brokers, and we have live data in there. We have live data and we have a lot of APIs as well. So if you're looking for data, we definitely have that. And I think looking at Volland, looking at ORATS together, what a great way to put your trading day together. So I really appreciate you guys having me on, and big fan of Volland. So thanks.
Yeah, appreciate it, Matt. And we're now overdue for maybe some zero DTE special.
Yeah. I definitely have my opinions on there.
Yeah. All right.
I can't wait for that discussion. All right. Let's schedule that one.
All right. Well, thank you, everybody. And may Volland help you in your future trading ventures.